So is condo investing dead in Canada? Well, not quite, but it is definitely getting there for a few reasons that I'm going to cover in this video, starting off with this new program that Mike Moffat here is highlighting. Now, I'm not an expert in development. I'm not an accountant, but I'm going to do my best to explain this to you guys so you kind of understand what's happening and what's coming down the pipeline. So essentially, the federal government has committed to reintroducing an obscure 1970s tax provision that incentivizes the construction of small-scale rental housing such as townhouses and multiplexes and probably low-rise apartments. Now, when this measure was first introduced in 1974, the MERB provision allows individuals and corporations not in the business of real estate to deduct losses created by capital cost allowances on rental property from non-rental income. In other words, an owner, in part or in whole, of a MERB provision eligible apartment building can deduct some of the expenses associated with that building against their personal or corporate income. So again, not an accountant, but I believe back when I owned rental property, you used to be able to deduct 4% depreciation against the structure, and you would deduct that against any money that you made from the rental income in excess of the expenses. So with mortgage pay down and cash flow, positive cash flow, let's just say I made $7,000. Well, I could deduct the structure, and let's just say the structure was worth, $100,000. I could deduct that 4% every year, which is $4,000, meaning I'd only pay tax on $3,000 of the $7,000 that I made. Now, in my case, I pretty much paid tax on nothing because I'd make like $8,000 a year. And then once I deducted the structure, I remember I paid like pretty much no taxes. And that's how I think it was operating. I don't think you could deduct it against your personal, like if the deductions were in excess of the money I made from that property, I don't think I could deduct it against my actual personal income. I tried to call my accountant. He's on vacation. I don't want to piss him off. But if you want to absolutely confirm, call your accountant. But that's the way I believe it worked before. So basically they're saying capital cost allowances are a form of economic depreciation that can be applied against income. Maybe I'm wrong. You might acquire a depreciable property such as a building, furniture, or equipment to use in your business on professional activities. Since these properties may wear out or become obsolete over time, you can deduct their cost of a period over several years. This yearly deduction is called a capital cost allowance. Now, as part of Budget 2024, the federal government increased the capital cost allowance from 4% to 10% for new purpose-built rental housing, which enables owners to claim 10% of the building's book value against their taxes each year. A move designed to incentivize builders by moving projects from unfeasible to feasible through increased after-tax returns on investment. So let's just use like really round numbers, all right? Let's say I make like $300,000 a year, but I'm rich. I bought a couple properties, I made a bunch of money, I was smart with my investments, and I have the means to invest $5 million in one of these things, okay? And let's say in this project, the building is worth $10 million, the overall property is worth $20 million. Therefore, I own 25% of the overall project. So of that $10 million building, I own $2.5 million of it. And I can deduct 10% of that $2.5 million every year against my personal income. Meaning, if I make $300,000, I can deduct $250,000 against my income every year. And I'm only paying tax on $50,000, which probably isn't even the case because I don't think you pay tax on the first $12,000. So you might pay tax on like $38,000 every single year. Again, not an accountant, just trying to give you guys a picture of how this might work. Now, if that's the case, are people going to invest in a normal residential condo and put down $100,000 to own $500,000? Or are they going to invest in this where they have a much bigger tax advantage plus the returns of the actual project? And that's where he's going with this. So in November 18, 1974, Finance Minister Turner provided a grim picture of the state of the housing construction. I have already referred to the short-term prospects for construction of new housing. The project weakness in this sector of our economy troubles me a good deal. It threatens to reduce employment, raise production costs, and increase housing prices and rents. Even more important, a reduction in the supply of new housing could lead to a lower standard of accommodation than Canadians deserve. Given Canada's inability to build housing at the same rate as population growth and the current decline in home building, particularly in the Greater Toronto and Greater Vancouver areas, this paragraph could have just as easily been written today. So he goes on to say, how did the MERB program benefit investors? Being able to both deduct depreciation expenses from personal income and front load those expenses provides significant tax savings for investors. It provides a tax advantage to building new rental housing over other forms of investment. Most notably, it offers tax advantages for building new rental stock rather than buying existing single-family homes and renting them out. Now, if it was so sick, why was it canceled? Well, it was a tax provision designed to help wealthy investors who tax advantage building rental apartments over other forms of investment. Also, somewhat ironically, the measure died in part because it was seen as too successful. It ended up building more rental housing than anticipated and had a higher revenue cost to the federal government than forecast. The main beneficiaries of the MERB provision from the supply side of the market have been the developer, promoters, and investors with high marginal tax rates. There is evidence that some promoters may be overvaluing projects. Investors who tend to not be conversant with real estate matters generally are purchasing the asset solely on its tax shelter aspect with no recognition of possible poor investment prospects due to inflated purchase prices. So yeah, this could actually, another reason why I want to say I'm bullish on detached, but I'm not bearish on it. This is just another thing that would probably prop up prices when we look at land and detached homes, because with these tax incentives, people would be willing to pay more for land just to get one of these projects on the go started and, starting the construction, right? So something like this could actually prop up the cost of land, which already, as you guys have seen on my channel, like the inventory isn't that high for detached homes as it is right now. So then he makes some predictions, with number one being that the MERB provision will facilitate the construction of rental multiplexes and townhouses and not high-rise apartments. And the reason being is that it's going to attract smaller scale investors who don't have the resources to build high rises, but I think it would build a lot of low rise apartments as well. He then says on the second prediction that it will be a consortium of mom and pop investors. So you would have a huge group of mom and pop investors that would typically be buying an individual condo, instead pooling their money to buy into one of these projects. Number three, investors using the MERB provision will have a different composition than those in the 70s. So back then, he is saying there was groups such as doctors and lawyers, which made up a disproportionate portion of investors. And today, you'll probably just have a very good mix of all types of people investing in these types of projects. And number four, the MERB provision is likely to kill investor pre-construction financing of condo units. As it stands right now, when we talk about pre-sale condos or pre-con, it's probably close to 70% of the purchasers in any project are investors. Just because of the way it works, the terms, right? End users typically don't want to wait 3 to 6 years to move into their new home. So you're going to have a lot more investors. Investors want to put down less money too. They kind of want to almost like an options contract. They don't want to actually have to own all of the expenses and liabilities that come with the real estate until sometime in the future when hopefully rents have gone up, they're wealthier, they have more money, and maybe the value of that property has appreciated. But now he's saying that this is likely going to kill the pre-sale market. And he says, when the MERB provision was eliminated in the early 1980s, investor activity shifted from rental construction to the condo market. Reintroducing this provision would cause the opposite shift, as MERB provision buildings would enjoy a substantial tax advantage over financing pre-construction condos. In many parts of the country, pre-construction condo purchases are in a state of limbo due to a combination of falling prices and the post-pandemic rise in interest rates. Layering MERB on top of an already weakened patient would probably kill it. Given the widespread but not analytically verified belief that a condo financing model relying on pre-construction sales leads to units more suited to the needs of investors and residents, perhaps we should view this as an opportunity, not a threat. The federal government should reimagine the condo market and work with the industry to develop financing models that do not rely on mom and pop investors to get housing built. And then number 5, he says the MERB provision may lead current investors of single family homes to sell those units and invest in MERB provision eligible apartment construction, which is pretty obvious. People are going to sell their detached homes and they're going to invest in this as the tax advantages are way better. And then he concludes by saying, we hope the federal government will begin consultations on a redesigned MERB provision and institute it by the start of 26. If done correctly, it would accelerate the construction of missing middle rental housing, put more single-family homes back into the hands of families, and aid in the development of a condo financing model that does not rely on mom-and-pop investors. Now, as far as the condo market goes, right, as you see on my channel, we are already at I believe multi-decade highs for purpose-built rental construction. Rents are falling. vacancies are rising, and all of these things are kind of already scaring investors out of the condo market. Now, that being said, I have sold a couple condos this year to investors. The goals of investors have changed. Previously, you would sell a property to somebody and they would, be hoping the value of that property would be a lot higher in 3 years. Those aren't the people that are investing now. Now it's people that are buying a condo for their kid, or somebody who's buying for retirement, just so, over the next 20 years that mortgage gets paid down and then they have that supplementary income in retirement. It's not people hoping to make crazy gains in the next 2-3 years. So there still is a small pool of investors out there. But again, if there's something better like this that provides a lot more tax advantages, you're probably going to see a lot more investors go to that as opposed to taking on all that risk yourself with the one property, not having the tax advantages in an environment where rents are already falling and vacancies are going up. And then the tenant landlord issues that are currently going on where, like, as a landlord, you basically have no rights. You almost don't even own your property. Well, if you invest in these projects, you might have 100 tenants. So now that risk is kind of taken out of the equation because that risk is being spread across 100 people, not just one person. So again, not an accountant, but I could see this being very attractive, especially to people with high incomes, developers that already own a bunch of rental property that can now do this and then offset the income that they get from their other rentals and everything in between. But what do you think? Do you think condo investing is done in Canada? Drop a comment. And if you want to chat with me about buying or selling in the Fraser Valley, there's a link down in the description. Otherwise, I'm that Agent Kelly. I'm making moves to move you. Peace.